Hey everybody, Jason here. Happy hump day. Hope you guys are all having a great day. So you can see we are up or down, not much today, just kind of hanging out. And I feel like the last couple days is just, as far as Tesla's concerned, just a bunch of breath holding to see what the reaction is and see what the earnings report is coming up. We did get the SPY put credit spreads. Those closed at $1 this morning. So we got our 3.25% gainer in one day. And then that was on 30 of them, and then 10 of them, of course, we just took the 1% accidentally. But both of those fine, so we are out of those now, and we will repeat the play tomorrow for Friday. So, Tesla, I don't foresee a big. I do see an earnings beat. Typically, Tesla does go down even with an earnings beat. The uh, the next few days after earnings report does come out, and I'm comfortable with most of the plays. Expected move I've seen anywhere between like 26 and $40 maximum. So pretty comfortable with most of the plays. The only ones that are kind of questionable at this point are the 830s. And what I want to do is really quick jump into option strat and look at a couple different things as it relates to this play. So here essentially is the play that we have on Tesla. This is our put credit spread. We got we're up $10 on it. And what I did is instead of P&L, as far as loss, basically I just switched over to value. So we're sitting right in this range where it's about a $95 value right now. And what we can see is if we have that move down to, let's say, around the 800s, we're going to be at somewhere. Let's see, can we make this any more granular without losing it? No, we really can't. I guess that was like optimal granularity. Okay, so, well, 800. So we'd be down about $300. But what we can do, and what I'm probably going to do here, is take a look at rolling those same plays out a couple weeks. So we can look at what would happen if we rolled them out 2 more weeks, and then we came down to that same level. And this is all just a function of extrinsic value. So adding 2 more weeks to it, instead of being down 300, we would be down, or not down 300, we would be down 200 from our initial premium received. But now at the $800 level, it would be down around a $2.70 play. So that's 30 more cents or $30 more worth of value. And maybe even a couple more weeks out, we can see that same thing. 246. So we'll look at those. 246, 267 compared to being 289. And that also gives us some more time for bouncing back up or just managing it. So what I'm going to do is I'm going to move the bulk of them out to this point. I think I would have no problem being around the 250. That'll be the value of the play. So we'd be down on them. If Tesla happened to drop down to 800, we would be down $160 per play. And at that point, I can choose to roll it out farther or further. And what I would do is I would just roll it out to prior to another earnings, expecting another earnings run up. So let's jump back into the account and we can go ahead and do that. So these are the guys we're going to move out. We'll hit trade, view all options, 29th. And where are you? We're at 830s. So we will buy back the ones we sold and sell the ones we bought. And then we're going to go out a couple more weeks here. Nope. You got to be careful with that sometimes. Sometimes it doesn't switch over from buy to sell. So we actually want to make sure this is switched to sell. There we go. No fat fingering on this one, please. And potentially we could move it down a little bit. So we can see like the 820s, 15s, those are worth about $100, and maybe a 95 here. So we can take a little bit of the risk off the table for that same amount if we were to roll it out to the exact same strike prices. Then, well, this did not select correctly. Well, we're actually going to buy the 815. If we were to roll them out to the exact same strike prices, we would actually collect a little bit more collateral, and then we'll sell the 820. And when this populates, we may see that it pays us $5. Maybe it's maybe we pay $5, but this is just giving us more time. Hopefully this does populate, since we only have 30 more minutes until market closes. Oh, we can see it screwed up there again, actually. So just a tough time doing this. Has Robinhood been glitching out like this for you guys at all? Because this seems to be just like normal. And I cleared out a bunch of stuff on my phone, hoping that would help out. I don't know if the servers are just slow or something at this time. No connection. This would be terrible if I'm trying to protect my account a little bit here, and we just don't have any internet availabilities. Well, I guess that's not going to be shown. Let me try getting rid of. I'm going to try to reset my data connection. Okay, see if that helped at all. There we go. Just had to turn off data and then turn it back on. So you can see we get a credit. We get a credit for rolling it out and down a little bit. So that's what we're going to do. And I'm going to do it on 20 of them. I'm still going to leave $1,500 at risk, which is fine. And we'll see if we can collect $5 a piece for these. And we want a credit. And the nice thing here is, like, we could roll them out for $0, for a penny, just kind of like whatever we can get. But the nice thing about this is going to be that since we rolled them out to this point, just depending on earnings, we can roll them out to right prior to next earnings and take advantage of that run up. And since we're going to have another portion of growth, more deliveries, etc., we could even roll them out 6 months if we absolutely needed to, if it happens to take a decent dump. But at that point, we could actually roll them up a bit, since in my mind, Tesla will, it's over time. It'll go up. We just don't know what's going to happen today or tomorrow. So let's replace this, see if we can get filled at a... Yeah, let's see, $3. It's always nice to get paid. But, it's more time. The disadvantage of this is going to be it's going to take more time in order for us to realize any of the collateral or any of the premium that we received. But the good part is sleeping good and not being stressed out after hours. How about $2? And if all else fails here, I can always put in for a credit. Basically pay $2. $2 each instead of receiving $2 each. Tesla might be coming down a bit, which it might, just right before earnings. So I'll fiddle with that a little bit, but get the bulk of them, 20 of them, rolled out to farther down the road. And I think that'll be it. So tomorrow should be a big day. Actually, after hours should be a big day, kind of one way or the other. We do have a few that I should be looking at closing, so I'm going to switch this from return to equity and look through some of my credit spreads here. So we have a few of them that we need to deal with here pretty soon. So we have ones that we can close for $10, $11, $16 that are out a couple weeks. Doesn't make really too much sense to hold those. So I do that every once in a while, just kind of go through the positions and see if the premium I'm receiving is really worth holding on to these plays for a longer period of time. Because I think I see some of these. I saw some of them. I thought earlier that I could close for like $5 or $10. I mean, here's $12. We could close that at any point. We don't need to wait until October 29th, another week, just to collect $1 or $2 a day very much. So that is what I'm doing. Any questions, please let me know down in the comments, and I will do my best to get back to you. We do have quite a bit of buying power, so right after earnings, we'll see what what the reaction is tomorrow, and then probably use up some of that money for some more put credit spreads. All right, guys. Any questions? Of course, let me know. Love you, and let's make a lot of money.